Hello, and thank you for checking out this video. My name is Braden Drake, and I'm the owner of Braden Drake Law. I work primarily here in San Diego, California. This is actually my first YouTube video, so I'm going to start out by telling you a little bit about myself. So, like I said, my name is Braden. I graduated from Indiana University after growing up back in Indiana, and I studied Russian there and also political science. Took a lot of business courses. And then I came out to California to go to law school here at California Western School of Law, where I did my JD program. And then after that, I went to the University of San Diego to do their tax LLM program. So it's essentially a Master's of Law program specializing in tax law. So in that program, I took tax controversy, corporate tax, partnership tax, international tax, and basically all things tax. So now in my practice, I work primarily with tax clients, so doing representation for people when they have issues with the IRS. And then I also do tax planning and small business planning, so I really enjoy working with small businesses, helping them get their entities formed, whether it be an LLC or a 501c3, and then doing their tax planning for them, as well as other business licenses, contracts, and other legal needs that they might have. So that's a little bit of background. This series of videos I'm going to do is going to focus on estimated quarterly tax payments. So I actually broke it into 4 different parts, so that way if you don't want to watch all 4, it'll be easier to skip around. And the parts I broke it into is this first one, which is going to focus on why you need to make estimated quarterly tax payments, so it's more of an educational background for you. The second part of the video, rather the second video, is going to cover planning to estimate your own quarterly taxes, or just planning to meet with a tax professional like myself, another tax attorney, or a CPA if you want to have them do some planning for you. Essentially, I'll cover what documents you need to gather and what information you need to have to make the process go more smoothly. The third video is going to be the longest one. That will be on how to actually calculate estimated quarterly tax payments. It can be a little overwhelming at first, but if you go through it as a step-by-step process, it is manageable if you have all of your ducks in a row. And then the fourth video is going to cover how you actually pay the tax, so the website you need to go to and how you can do that through the IRS, and then also some planning considerations. So if you already know that you need to make the tax payment and you don't want the educational background, and you use a program like QuickBooks, or you already have an accountant that's told you how much you need to pay, you might want to skip straight to the fourth video, and I'll tell you how to do that. In the meanwhile, let's jump into the first segment of why we make quarterly estimated tax payments. And now I'm going to jump to a slide presentation I made. So quarterly tax payments, what you need to know, why must you make quarterly tax payments? It's really straightforward, actually, when you think about how taxes generally work. So when you have an employer-employee relationship, you have tax withholdings. So typically, if you work for a large corporation, say you work for Amazon or you work for a hospital, they issue you checks every week or every 2 weeks, and on your check it'll say, we withheld this amount of money for your federal tax payments. And the way they determine how much they withhold is when you start at that job, they give you a form W-4 that you fill out, and if you recall, that's where you have the blanks, and they say put a 0 here, a 1 here, a 2 there, etc., and then you add up those numbers, and it essentially puts you in a bracket to determine what percentage of your paycheck is withheld for federal taxes. And then when you go to file your taxes in April or before that, you have already made tax payments throughout the year, and if you've overpaid your tax, you get a refund, which is what happens to a lot of people. Or if they didn't withhold enough for you, you end up owing tax. Well, for those of us who don't have employers that withhold for us, we're responsible for our own tax payments. And if we don't pay them quarterly throughout the year, then the IRS might charge us penalties. The reason being is, in the eyes of the IRS, we owe our taxes as we receive our income, and they're doing us a favor by allowing us to pay quarterly rather than cutting a tax check every time we receive income. So if we don't make our estimated quarterly tax payments, they think time value of money, we got our money late, and you owe us interest and penalties now. So in order to get on the ball as a small business owner or sole proprietor, you need to keep up on your estimated quarterly tax payments. So when must you make payments? So there are essentially, the rule applies to when you must make payments, and then I'll also give you guidance on when you should make payments. So just because you aren't required to make the payment doesn't mean that it's still not a good idea. But essentially the rule, as I have on this slide here, is two parts. If you expect to owe at least $1,000 in tax for the taxable year, and you expect your withholding and refundable credits to be less than the smaller of 90% of the tax to be shown on your return, or 100% of the tax shown on your prior year's return. So that's a little complicated and hard to break it down, but essentially you think, am I going to owe more than $1,000 in tax? If yes, go to the next step. And then I start backwards. So you look at your tax return from last year, see how much tax did I owe, and then you compare that with how much tax you're going to owe this year, and then you weigh those out under that rule there. It's a little abstract. It's a lot easier to think about with an example, and we're actually going to go through one in one of the later parts of this video. So there are some exceptions. If you were a US citizen or resident alien and you had no tax liability for the full 12 months of the prior tax year, then you don't have to worry about this. This kind of makes sense when you think back to the rule we just covered. And then there are special rules that apply for farmers, fishermen, and other household employers with higher incomes. We're not going to really focus on those, at least here in San Diego. I don't work with many farmers or fishermen. If I were back home in Indiana, I would probably know these rules in a little bit more depth. Payment due dates. So this is what's pretty important. Your first payment is due April 18th, second payment June 15th, third payment September 15th, and the fourth payment January 16th. So I'm doing this video now. It's actually a little late. I wish I'd gotten it out sooner, but today is September the 11th, 2017, and the next estimated quarterly tax payment is due on September 15th. So if you've started your business between June and now, you'll probably be prepping for your first quarterly tax payment, or you're prepping for your third one of the year, and we'll get you all squared away. So penalties for failure to file. If you are required to make estimated quarterly tax payments and you don't, your penalty for not doing so is 0.5% of the tax owed per month that you have a late payment, with a maximum amount of 25%. But please note there are also penalties for failure to file your taxes. So if it comes around April and you don't file, you'll have more penalties on top of that. And then there are some exceptions and limitations. And of course, don't forget about interest. And I will exemplify these penalties after we do our calculation in the third video. And you'll realize that the penalties, if you're making a pretty average income, aren't too severe. The reason I mostly encourage people to make these estimated quarterly tax payments is because if you don't, when you go to file your taxes in April, you'll probably be shell-shocked at the amount of money you'll end up owing. So it's better to set the money aside as you go and make your estimated quarterly tax payments. So that is it for part one of this video. And if you have any questions, just drop them in the comments and I'll try to respond to them in a relatively timely manner. And I will see you for part two.